So when you go to sit down to create a financial forecast, you're going to have to look at contributing factors. Now, many of the factors that we're going to talk about, they're unpredictable, but they still need to be tracked, right? When you have some historical data to see how they impact your business depending on the granularity of your analysis, right? You could be doing a monthly forecast. How are the next 4 weeks going to look? Certain factors are going to play more into that versus a long-term forecast. How are you going to perform over the next 12 months? So note that this is not a full list of all the factors, just some primary factors to consider. There are many, many other factors, but these are some of the basics that you're going to need to build into your financial modeling forecast if you want to have a solid operating budget to benchmark against. So first, I want to talk about seasonality. Now, as you understand, there's high months and there's low months. We've talked about this already. As you know, those also impact other parts of the business. For example, raw material costs are going to change over time. And this is important for retailers and cultivators and everybody, but we'll just talk about retailers. It's important for you to keep this in mind and keep an eye on your input costs so you can preserve your margins as price increases. Now, again, the other side for the cultivators, you need to understand this as well. When there's a huge boom in supply in October when everyone's harvesting their outdoor crops, you may see a dip in prices overall, and especially in that outdoor flower market. And this could also transfer into lower prices for oil or other derivative products. So as a cultivator, you may want to think about planning your crops out around typical supply changes so that you don't get a huge amount of supply at a significantly lower cost. How can you flatten out this curve, or how can you take advantage of price increases during those thinner months, December, January, February, when it's only indoor crop available? And also, another thing on seasonality is that consumer behavior and preferences will also change depending on the time of the year. For example, demand for products change over time, or specific product types in your line of products, such as gift boxes are more popular during the holiday seasons. So maybe you want to consider doing bundling during the holiday season and frame it or market it as a gift pack. Or maybe you notice there's an uptick in sales when there are tax refund checks coming out to your market. Things of that nature. Just understand and see what factors affect the seasonality, which brings me to my next point, tourism. This builds on seasonality. And as a retailer or vertically integrated cannabis business, if you're located in or on the way to a seasonal tourist destination, such as a lake, or a beach, or even a snowboard hill or mountain, then you'll typically see an uptick, during your peak months. So again, lake and beach, probably an uptick in the warmer months. If you're on the way to a ski mountain, you're probably going to have an uptick in the colder months. It's important to know this because if you stack up all of your cash during those high months, then you can actually make it through those thinner months depending on how thin they are. But it's very, very important to understand the tourism factor of seasonality. When can more people potentially walk through the door? And typically you're not going to actively go find all these people. They're just more densely populated or put into a certain area. It's just naturally going to bring more people in. But this has cascading effects down the supply chain. Higher demand during the summer. If you're producing cannabis in that local area, you need to make sure that you have enough cannabis in the ground leading up to that boom in tourism. Now, the next factor I want to talk about is weather and climate. Now, as you know, weather is finicky, and the meteorologist seems to never ever get it right. But take note to the relative weather in your area. For example, in Los Angeles, when it rains, people usually don't go out because it rarely rains here. So they're willing to sacrifice that evening or that day without going out and kind of staying more cozy in their house. What you'll notice is that larger food chains without delivery can see a 3 to 10% dip in sales during those days compared to the previous days. So if Wednesday it rains, they'll see a 10% decline versus those previous 4 Wednesdays. Again, people are not used to running out in the rain in LA, and they'll either pass on getting their product for the next day, or they'll look into a delivery option. Now, as for climate, which is more of a macro movement in the weather patterns, this is more building on that seasonality. But you may look at how does the average ticket price move in winter compared to summer. Maybe people don't want to go out in the colder months as often, so they buy 15 to 20% more product during those colder months compared to those warmer months. Just things to look at, tracking your average ticket price over the entire year to see how does the climate affect that. Of course, you're going to have the granular day-to-day with the weather patterns, but just looking into and understanding how weather and climate may impact your customers, and then that cascades down into the other parts of the supply chain. Now, to make this even more granular, we talked about you're going to have your annual forecast, but you're going to also have your monthly forecast or even your weekly forecast, which brings me to the day of the week. Now, this factor is something you look at, again, in these more granular forecasts. And these forecasts help you to understand the fluctuations in daily sales, not monthly sales, but it's still an important factor to consider. Now, depending on where your business is located, you may have huge swings in the level of traffic that you see at your retail cannabis store. For example, if you operate in a CBD, which is a central business district, right? Think about a downtown LA or a downtown Miami or anywhere where there's a financial district or big office buildings, or if you operate near one of those, you'll typically see higher traffic in sales Monday through Friday and less sales on the weekends. So it's important to understand the demographics that make up your local area because cannabis is still a local-based business, just like liquor is or beer. You don't go to the farthest liquor store, 25 miles away to get your normal beer, unless you're looking for something very special and unique that only that retail location has. But in most cases, the local population is going to tell you, what days of the week are going to be more busy than others. Now, the next factor I want to talk about is natural disasters, and we have to add this in there, pandemics. Now, you can never really fully prepare for a natural disaster or a pandemic, but it's important to see how they affect your business when you look at historical data to make better forecasts later down the road. Because, for example, we know that there is a wildfire season or a time when wildfires are more likely to occur in the state of California, and that could impact your outdoor grows by bringing down supply. Maybe a certain amount of cannabis just burns up in these wildfires, or people have to evacuate and cannot work on those outdoor grows. But it also could knock out power for indoor grows, right? You saw that PG&E, which is the electrical company in Northern California, was shutting power down to some of these indoor grows, which if you've got thousands and thousands and thousands of plants that just get turned off in the middle of their cycle, if you don't have a generator, then you're probably going to be losing out on all those crops. Okay, so this means you need to have a little bit more of a safety fund around those times to take desperate measures if your business calls for it, right? If you need to go buy a generator within 1 week, do you have $65,000 sitting on the sidelines, maybe to rent one, not even to buy one? That's just an example. But another example is with this pandemic. There was an increase in retail sales and even average ticket price was up, right? So people were buying more cannabis pretty much. So people were going into lockdown. They didn't want to leave their house. They stocked up on what they deemed to be essential. They wanted cannabis, okay? So how will this be affecting your business when wave 2, wave 3, wave 6 of the virus and corresponding lockdowns happen? Will you be able to look at, again, these more granular forecasts, your monthly forecast? So potentially you're seeing an upswing in the number of coronavirus cases. Will that lead to another lockdown? And how will that affect your business? Now, the next factor that I want to discuss is your marketing efforts, right? Businesses don't magically just grow. Just because you're selling cannabis doesn't mean that you're going to be naturally successful. You do typically put some type of marketing efforts unless you have a location that people just naturally trip over and it's right there and you have great foot traffic. But when you launch a marketing campaign, you expect and hope that this will drive more sales, more revenue. Now, if it's your first time with this type of campaign, you're likely guessing about the impact. But once you launch your campaign, you want to track your sales to a relatively small granularity to see how it impacts your sales. For example, if you do a coupon in a local street newspaper and it releases on Tuesdays and you want to see how sales are affected each day until that coupon expires. So you see, all right, it launches on Tuesday. What were sales on Tuesday, Wednesday, Thursday, Friday, Saturday? You'll see some type of curve so you can plan out your inventory and deploy your labor properly when you do another similar campaign later down the road, right? When you're creating an operating budget and a forecast, you have a certain amount of money you allocate towards marketing, and you're going to have an ROI on those dollars. So if you spend $50,000 on marketing and every dollar you put in, you get $4 out, that means you're going to have $200,000 additional revenue during those times. So $200,000 in additional revenue, what does that mean in how much product that you have to acquire to make sure that you don't run out of stock during those marketing campaigns? That's how, in understanding these marketing efforts, how they impact all these different parts of the business, and why it's important to understand the correlation between your marketing, your expenses, your supply, and your revenue. Another factor that I want to talk about is changes or updates in taxes. And this is likely an increase in taxes. Very, very rarely do you see a decrease in taxes. So keeping an eye on what the state and local tax authorities are proposing is critical to your financial forecast for two main reasons. First, in most cases, when there's a rise in consumer taxes on cannabis, there will be a subset of people who choose to visit unlicensed shops if they're available in your market. They're going to say, I don't want to pay these egregious taxes. I'm just going to go to the unlicensed shop down the street. Not a big deal. This happens in California since there are many unlicensed shops. But for states like Arizona or Michigan, that's probably not the case. But you may see people start to go to their local growers or to their friends for direct access to product. But again, this surely depends on the consumer's level of comfortability with that type of situation. Some people have no sensitivity to taxes. They'll just pay whatever it is. Whatever the final bill comes out to be, they have no discretion. They're just like, okay, it's $82. Here it is. The next week it's $94. They don't really pay attention. But some people may drop off. You need to quantify what that is for your business. There's not many cases in which taxes get changed, but if you do see that happen, watch how it affects your business so that if it does happen again, or the opposite, right? If they increased it one time, maybe they decrease it, you may see a change in consumer behavior. Now, the second reason it has an impact is that when you see an increase in taxes, this means that you need to be more careful with your minimum cash on hand requirements. As we talked about, how many months of operating capital do you have? There's also a factor I didn't really talk about is making sure you have all of your tax liability still on hand, all the money for that, and not using your tax money as operating capital. I'm going to say it again. Tax money is not your money. It is not to be used as operating capital, which means you should not be using it to buy supplies. You should not be using it to pay payroll. It should be split out right away from your revenue every day that you do a cash drop or a bank deposit or reconciliation with the registers. Put it in a separate safe or a separate account so that you don't dip into that money and not be able to pay or cover your tax bill when it comes due. Because when you run into a tax problem, they can become exacerbated very, very quickly due to the high fees and penalties associated with being late on your payments. And the last factor we're going to talk about here is industry growth rate. Now, there will be a natural growth or decay in every industry. And in the case of cannabis, it gets more and more popular every day. So in your financial forecast, you'll likely see some type of natural growth, whether that's 2%, 5%, 15% every year. But the nuance to understand is, are you maintaining your market share for your particular vertical? And that's a hard question to answer because there's not a lot of public data out there on this. So when you see in cities that are adding 25 new licenses to a city that already has 40 licenses, you may see a drop in your retail sales because more businesses are competing for the same amount of consumers. So another nuance to understand is the consumer base growing with the amount of additional licenses or retailers? Now, as you see also with the earlier parts of the supply chain, when they start to add more retail locations, this may mean that they're serving what we call these cannabis deserts. There are certain cities or certain parts of cities that have no access or no easy access to cannabis, which means when they start to put retail licenses in these places and more people have access to cannabis, that means that there's going to be more demand for raw product. So it's important to understand, as someone who's at the beginning of the supply chain, the nurseries, the cultivators, the manufacturers, that you watch what's happening in the retail front so that you can create more product or grow more product as you see the demand for licenses, the demand for retail goes up. Or if there's contraction in the retail market, understand there may not be as much of a demand, so you may need to scale down. It's a lot of different factors, but again, industry growth rate and maintaining your market share is critical to having and understanding your financial forecast. Now, hopefully this presentation has brought you some value and helped you to understand the importance, again, of financial forecasting and budgeting for your cannabis business. Now, if you need help with forecasting or budgeting, please reach out to us via our website at greengrowthcpas.com or give us a call at 800-674-9050. We've helped hundreds of cannabis businesses with their financial forecasting, their budgeting, pro forma financial statements for their licensing application, or for when they're actually going to go do some fundraising, things of that nature. We understand how the numbers all come together for all different verticals in the cannabis industry. So if you need help with forecasting or budgeting for your cannabis-based business, no matter the age of the business, if it's a new business or if it's been around for a few years, please reach out to Green Growth CPAs via our website at greengrowthcpas.com or give us a call at 800-674-9050. Have a great day, and we'll talk to you soon. I need to let you know that the information contained in this presentation is for guidance purposes only and not as professional legal or tax advice. And further, it does not give any personalized legal, tax, investment, or any business advice in general.